Are you pricing for profit or guessing? Hi, I'm Josh Horn with Horn Valuation. I help business owners and attorneys with business valuation and building business value. It occurred to me recently, I read a great book, and I'm going to show you a great example from the book that probably one of the most impactful decisions in your business that you don't spend near enough time on is price. Most of us, and I would include myself in this category over a number of years, unfortunately followed bad advice. We followed rules of thumb, we followed markups, we used various procedures and industry averages to determine our prices. And when you consider that the average customer, only about a third of them actually buy on price, I think you're leaving a ton of money on the table. And in fact, you could actually be losing money on every single job that you sell. So this is particularly relevant if you sell jobs. And what I'm talking about here are HVAC contractors, construction contractors, electricians, even those that sell products need to understand how to price jobs appropriately so that they don't only just break even, but they actually create a profit and ultimately cash flow so they can reinvest that back in the business. So we're going to go through this so that you're not guessing about how to price things. So here's the book I referenced previously. It's called Make More Money, 12 Profit Pillars for HVAC Contractor Success. Even if you're not in the HVAC industry, I highly recommend you take a look at the principles I'm going to present to you today because they work across a lot of industries. And certainly if you are in that industry, consider picking up the book. I'm going to give you a framework that was presented in the book, and then I'm going to put a couple of twists on it based on my experience as a valuation analyst. So the example presented in the book gave you a scenario where your direct cost of goods sold, that is your direct materials and labor and job costs, were $2,700. Your overhead percentage was 38%. Your net profit goal was 10%. Figure out how to price the job. So this is how I think some do this, unfortunately. And you may be doing this now. And again, if you are, don't feel bad. Just this is another way to do it. And again, I'm going to simplify this so that your life isn't overly complicated at the end. I'm going to show you how to do this so that it doesn't blow your mind. But you have to get the financial information correct to employ this method. Now let's talk about pricing something wrong. If you use something like a markup method, in this case, they used the cost of goods sold and marked it up by 1.6. Okay? So just took it, grossed it up by 1.6. And you may think to yourself, wow, they're getting a 38% gross profit. Great day, right? However, because they underestimated the impact of the overhead of the business, which includes things like rent, utilities, office staff, things like that, they actually lost money on this job, $353. And it gets worse, unfortunately, because for most businesses, they're also going to have to cover things like additional working capital needs, which is basically the cash needed to cover you until you collect on receivables when you have to pay bills. You may need further investments of capital expenditures, trucks, computers, other equipment. You may need to service debt principal. Maybe you're doing an acquisition. Maybe you're paying back a long-term loan. So when the dust settles, actually the cash flow is even worse, where you're losing $613 on this job. And if you're a business that does 10 of these jobs a week, 52 weeks a year, you're a business that's selling approximately $2.2 million a year in sales. However, you're burning through $318,000 of cash, almost $319,000. So let's fix this. How can you fix this? Now, you don't have to do this next one my way, but because I'm an accounting nerd, I actually dusted off my algebra skills and went, Well, how could we solve for X? And there is a way you can mathematically do this in the next tab. You can actually solve for X in this equation. And basically X minus the 2,700 minus the 0.38 overhead equals a 10% profit, so a 0.10x. When you solve for X, you get $5,192 on this job. Now that's quite a bit more than the priced wrong method. Almost $1,000 more over here at 43.20. Now keep in mind, there is no magic to 10% profit. Maybe you want to make it 15, maybe you want to make it 20. So let's prove this out with the actual mathematics, not just an algebraic formula. Let's take a look at this and see if it works. And you can see that it does. When you look at 5,192, which was how I solved for X, less the cost of goods sold, less the overhead for the business, you get a profit of $519, which is 10% of 5,192. So it does work. There are some key things that you have to understand here. You definitely need to understand the overhead of your business, which should include your income taxes, and you need to understand the direct costs of the job. That's typically the easy part for most contractors, is to know the direct costs on the job. The tougher part is typically the overhead piece, which is only available if you have good financial statements. Now note, as the book points out, and I would encourage you to do this as well, figure out the overhead percentage required to break even. In other words, you use the sales required to break even for the business, and that's the overhead percentage you want to use as well. Now, what's this really mean for this business? It means a lot of dollars left on the table if you use the price wrong method. And let's take a look at this. So we see that even when we take some subtractions for some additional cash flow reductions for working capital, capital expenditures, and debt principal payments, they still have $259 or 5% on this job. And if we play that forward even further, we can see that that's going to amount to almost $2.7 million of sales a year, which is going to yield about $135,000 of annual cash flow if they did 10 jobs a week for 52 weeks a year. And that's going to be over $450,000 of additional sales for that business for the year. Now, this is where we can simplify it. And you're probably thinking, Josh, this is making my head explode. The book points out, and I would encourage you to do this, once you get all these pieces nailed down, and I can help you with this if you need help, please reach out to me. You can actually employ what's called a single factor pricing method to figure this out, lickety split. And in this case, our single factor pricing was the 52%, which was the cost of goods sold percentage above. So we have our direct costs, our direct labor, direct materials on that job. We're going to divide that by 52% or 0.52, and we're going to get 5,192. So basically one step. So they consolidated this whole thing down into one step, and that 5,192 was how to price that job to yield a 10% net profit and a 5% net cash flow for this business. Definitely worth your time to nail down your financial statements, figure out your direct costs, your direct overhead, and all those other factors to be able to price jobs this way, or else you could be leaving a ton of money on the table. This is Josh Horn with Horn Valuation. I hope you have a great day. I hope you're having a happy new year. Please let me know if you have any questions.